Brian Stevens here with Mortgage Shots. I got Fred Krieger, who's the president of NAMB, the National Association of Mortgage Professionals, for one more week because you have your event coming up, right?
Exactly.
Tell me about the event. What's going on right now?
So right now we're going to be descending. There's about over 3,000 attendees that are already registered coming down to Las Vegas. We've only had one cancellation that we know of a person who's not attending. And again, people have really kind of taken fast. Let's not beat this down. Let's go and enjoy the industry the way we're going. We have over 500 exhibitors. So when you think about it, it's going to be the largest event that NAMB has seen in years. And so we're really excited about that part. And I'll tell you why, Brian, is that think of the industry, think of everything that we've gone through, think of everything that we're even going through right now. And we brought up, even stuff that's going around the entire country with certain devastations. Everyone wants to come together as a team and really rejoice what we're doing in the industry and actually do help people.
Well, I'll tell you what, I've been doing events for 10 years. This might be the biggest one I've ever been to. 10 years ago when we were doing this, when I first met you, everything was held together by duct tape. This is really kind of a seminal moment that says, hey, the industry has recovered quite a bit. You got to be hugely proud of this.
Incredibly. And you know something, and it's just not one channel, Brian. We're talking all channels. We're talking about brokers, bankers, small businesses. Think about even the evolution of our new PR campaign that we changed our brand. We changed who we're representing. That was the big focus point of that, that I've had over these last 12 months. And there's been so many people behind the scenes that have just been incredible and embrace this. And this is actually the great culmination of all these channels coming together as one, Brian. Think about it. When you have, just matter where the money comes from, guess what? Everyone's coming together because guess what? They want to get together.
Well, and I'll tell you what, if you're watching this right now, it's not too late to come. One great thing about Vegas is they've got cheap flights out of every city in the country that goes directly to Vegas. It's this weekend. In particular this weekend, in spite of what's happened out in Las Vegas, I think it's really important for us individually and collectively, no matter what we do, to take a stand and just and really coming together. So if you want to jump on, there's a link to NAMB down below. So go ahead and click on that and jump a plane this weekend and come out because I've got some great stuff that I'm going to be sharing. You were talking about you're changing who you're representing right now. It was the mortgage brokers, now it's the mortgage professionals because the industry has changed. Now, I just saw an article, and it's one loan officer, and it's for the pure mortgage brokers, and it's them taking a stand against wholesalers who are then basically using that information to feed their retail branch. So when those refinances come up, they're going to market them more effectively than you and essentially steal your client, the people that you're giving them. This was always something that kind of rubbed me wrong when I was a broker years ago. What are your thoughts on this?
I think when it comes down to it, and you and I have had this discussion, who owns the client? Who owns the data? No matter what channel you go through, if you're selling the loan off, I don't care if you're an independent mortgage banker, you're an independent mortgage broker, you're a small business. At the end of the day, what makes the world go around in terms of mortgages? Loans get sold. Loans get bought and sold every single day. Now, I'm not saying that what they're saying is right, but what are you doing as a mortgage loan originator to make sure that you're creating that stickiness of that particular client? I think that's what it comes down to, because this has been around for years. Even when, again, we used to sell loans to Wells, Chase, Citi, no matter who the independent mortgage lender was at the particular time when we were doing that, we always had a concern like, well, are they going to steal my client? Well, no. If I kept in contact with them, if I continuously marketed to them, this is not a transactional basis of relationship. It's the relationship. I can't just look at the transaction and say, okay, bye-bye. I have to maintain that relationship. And I know it's kind of a broader approach to it, but I think it comes down to the individual mortgage loan originator. How are you maintaining the relationship with your particular client every single day to make sure that it doesn't get, spun off? And if they're getting calls, you can make your directions like, well, guess what? If I'm sending to a particular lender and the last 5 deals had gone back to the lender refinance and I got hit with an EPO, well, guess what? I'm calling that lender up and I'm exercising my right to choose not to use them, right? That's my right as a loan originator. I can make that decision. But when am I making that decision as a mortgage loan originator today? And Brian, it doesn't matter if you're a broker or a banker. We sell loans too, and it gets sold off to another servicer. Well, guess what? That servicer may have $1 million worth of marketing material behind it. What am I doing? Am I going back to grassroots? Am I using other types of services to make sure I'm in contact with that client? If you have any calls, make sure I'm the first person you call. What is a loan originator done today? And that's a bigger concept. And you and I have talked about that in the past about, even the whole automation, right, of a mortgage. You eliminate the mortgage loan originator today because there's some automation? No, you want to maintain that relationship. Stop looking at a transaction as a transaction only and move on to the next client. You can't do that because guess what? We don't build up annuities. The only annuity we have is a relationship. And we've got it. And this is not something new. So when I saw this come across the headlines yesterday, I'm like, kind of like, it's not new. I mean, this has been around. This has been around forever in terms of this type of not anomaly or this type of issue that we've always battled, no matter what channel you're in.
Right. Hey, now I'm going to switch gears on you. So the House just passed a flood bill. Remember a couple of years ago when New Jersey was flooded and they were going to change our flood policies, and in some areas your policy was going to go from $200 to $2,000, which basically meant you would have huge foreclosures all over the place. We've now had 3 catastrophic hurricanes, and the House has come out, and their solution now is, well, just go ahead and make sure that you're using private insurance as well, as long as the state's okay with it. You don't have to use our government insurance. That's not going to solve the problem. Further, where we're living right now, we're looking at what could arguably be the most expensive natural disaster in the history of the United States. With the fires that we have going on in Southern and Northern California, which they're still blazing completely out of control. When you look at high-risk, high-prone areas to natural disasters, and this might be asking too much of you, but what do we do?
I think really at the end of the day, and you and I have had this discussion, and I brought this up, the federal government will always have housing in part of their administration, part of their logic. Think about that. They've been part of the housing solution. They've been part of the housing issues for years. They will never allow any particular group to basically fall off the face of the earth. Always be the backstop. Think about terrorism insurance. Think about flood insurance. Think about fire insurance. No matter what, they still want to see. I mean, yeah, they're going to say, hey, if privatization wants to take place, allow them to take place. Have the people have the choice. But the federal government will always back you in every crisis. So let's face it, we're going through a number of crises right now. And people are definitely going to need the help. You have insurance, you have reinsurance, and then you have the federal government. All the federal government is right now is basically that you're a reinsurance company to make sure that people are solvent. I mean, think about the entire crisis of the United States with housing, right? Who was the backstop? The federal government. They wanted to make sure that they were always there. So I think in terms of faith, I do have ultimate faith in the United States Congress that they'll always have the backstop for every single homeowner out there, regardless if it's flood, whether it's fire.
Yeah, and the last thing I want to talk about is the Treasury just came out with a regulatory relief. It's number 2 of a 4-part series. And the idea is this, is they want to get rid of overlapping regulatory structures where you've got, 7 different groups right now who are overlooking mortgage banking. They want to raise the dollar threshold for stress testing, which means you're going to stress test fewer banks. And they want to junk the mid-year stress test. Now, regulation is really kind of one of the topics of the year. It's going to be the topic of next year as well, as we look at trying to get rid of some of the stuff. I don't think anyone wants to go back to business as usual, but do we have too much regulation right now? When is it too much, and when is it actually helping the industry?
You're really asking me, do we have too much regulation, Brian? Really?
No, I know we do. I know we do, but we certainly don't want to pull back to where we were 2007 and 2008.
No, absolutely. We had a great session back in springtime in Washington, D.C. with the Heritage Foundation. We actually did a little fireside chat talking exactly about that, about, basically, what's the overregulation look like? Let's face it. Pendulum. There's always a pendulum. Which way is it swinging? The regulatory relief bill, whatever happens, is going to start swinging the other way again. Now, it's not going to go completely, where, loosey-goosey, let's open up. I think history has taught us that it's too soon. But at the same time, is it crippling businesses? I mean, I remember, basically after Dodd-Frank was passed, I remember, meeting with our state Senate and state assembly. They basically met, is Dodd-Frank, do we have to do anything else? What they decided, it's like, no. California actually said, no, we don't want to pass any more regulatory bills, in terms of the silver bullet. Dodd-Frank has already taken up. We don't want to stifle business, because they actually had a number of small banks, small credit unions saying, hey, we're out. I no longer want to be in this business. Why? Because the regulatory burden on us is too much, and the amount of small profit that we make for helping a small community is too great. And we lose money. So therefore, we cannot serve who we need to serve by doing mortgages. I mean, think about that statement. These are local community banks and credit unions that are serving, their mission is to serve the communities. I mean, think about us as mortgage loan originators and small businesses that are in these small communities helping them. Is it too burdensome for us? Absolutely. That's why we're trying to pass these bills. That's why we're going to Congress saying, hey, we need the relief in order to serve your constituents that are in these small communities that, guess what, cannot be served.
Well, you know, and it's interesting. One of the things that people really don't talk about is new bank formations over the past decade has basically disappeared. People might not know about this, but every year you'd have new banks that would come on and then other banks that would fail or other banks that would get absorbed. We still have banks that are failing, but we don't have new small regional banks that are replacing those. Mm-hmm. And these are the banks that service a lot of the small communities that you're talking about. So as a result, what we are getting is fewer and larger banks, which is the exact opposite of what the Dodd-Frank mandate was. And a lot of that has to do with the regulation you're talking about. You know, these banks are looking at this and saying, I'm out of the game right now. We've heard this for quite a while. So we need to get rid of some of the regulation. I'd like to see this be pretty drastic. I mean, if we have 7 agencies that are regulating the mortgage industry, why couldn't it be just one? Why couldn't we put everything under HUD or put it under the DOJ or, you know, something like that? But it's not going to be that drastic. I mean,
no, you're right. It won't be that drastic, but you will see a more, and I do prognosticate this, you will see a more evenly keeled system of regulators as we start seeing the transitioning of the director of, you know, maybe some of the things that you have brought up in the past about the CPD themselves, of actually momentum in Congress about looking at it, of maybe, you know, your mortgage, your Senate Banking Committee, maybe them loosening up, saying, hey, yeah, we will listen to you. We do acknowledge that maybe there is a problem, and, you know, not in terms of gutting Dodd-Frank, but, you know, augmenting it, changing and ending it for the better good. I see that happening more so than obviously a complete gut out.
One of the things the Treasury was talking about is having a clearly defined mandate. I think that's a real tip of the cap to the CFPB and what we've gone through over the past 5 years. Fred, it's been wonderful talking to you. I'm going to see you in a couple of days out in Las Vegas for the event. Again, it's cheap and easy to get to Las Vegas, and it would be a great time of year for you guys to come. All you have to do is click on the banner down below. You can check it out. It's not too late. It's going to be the biggest mortgage event of the year. It's going to be the biggest one I think I've ever been to. Great speakers, great booths, great parties, great information. Check it out. Do something impulsive. You're a salesperson. It's in your DNA. And we'll see you guys. With that said, thank you so much, Fred.
Thanks, Brian.
All right.